Hey, did you see the market's reaction to United Breweries Q3 results? The stock rallied 6.5% early today, hitting Rs 2,161.45 on the BSE. That's a pretty strong response after they released their earnings yesterday.
Wow, 6.5%. That's significant. I did a quick scan of the headlines, but I haven't dug into the details yet. So the market clearly liked something in that report. United Breweries, right? They're like the big guys in the Indian beer market, the ones behind Kingfisher and Heineken and all that. They've got a pretty wide reach with quite a few subsidiaries and joint ventures across the country.
Exactly. So, about that report, let's break it down. First, what's the big picture? Any major strategic moves that stand out?
Well, one thing that jumps out is their investment in a new greenfield brewery in Uttar Pradesh. They're planning to spend around 750 crore rupees on it. It's designed to produce both mainstream and premium products, including Heineken, with capacity between 1.0 to 2.0 million hectoliters.
Uttar Pradesh, huh? That's a pretty significant investment, right? So, what's driving that decision?
They're aiming to tap into the growing beer market in UP, where their business grew by about 20% in 2024. The rationale here is pretty straightforward. They foresee strong category growth in UP, they need the extra capacity, and this new brewery will allow them to meet that demand effectively, especially with their premium offerings like Heineken,
Makes sense. Okay, so let's get into the financial numbers. What's the story with their standalone versus consolidated results? Is there a big difference?
Well, for the quarter ended December 2024, the standalone numbers show a net sales increase of 10%, reaching 1,998 crore rupees. Their EBIT, however, dipped to 90 crore rupees, which is lower compared to the previous year's 118 crore rupees. Profit after tax also took a hit, coming in at 38 crore rupees compared to 85 crore rupees last year.
Ouch, that sounds like a mixed bag, right? Revenue up, but profits down? What's behind that EBIT and PAT decrease?
It looks like those investments they made in their organization and supply chain ahead of peak season ate into their profits a bit. Plus, they had an exceptional cost of 26 crore rupees due to implementing a productivity program. On the flip side, though, their year-to-date performance looks better.
So the YTD is a brighter picture? Tell me more.
Yeah, YTD net sales also grew by 10%, mirroring the quarter's performance and reached 6,586 crore rupees. What's really encouraging is that their gross profit margin expanded by 46 basis points and their EBIT margin also saw an increase of 21 basis points compared to last year. That resulted in a 13% increase in EBIT, landing at 505 crore rupees.
Okay, good. So margins are improving overall. How about profit after tax?
Profit after tax, YTD, increased by 5%, reaching 344 crore rupees. So while the quarter had some setbacks, the year-to-date numbers paint a picture of solid growth and improved efficiency. Now, remember, these are the standalone figures.
Right, standalone. So how do these compare to the consolidated results?
The consolidated results are pretty similar. Net sales, profit figures, and margin improvements all mirror the standalone performance. There aren't huge discrepancies between the two, which suggests that the subsidiary Maltex Masters Limited is performing in line with the parent company.
Got it. So whether we're looking at the standalone or consolidated figures, the story is generally the same. Revenue growth, margin expansion, YTD, but some profit pressure in the recent quarter. It seems the market is focusing more on the year-to-date improvements and the growth potential, hence that jump in share price.
Exactly. Now let's talk about the key drivers behind these numbers. Volume growth seems to be a big one.
Yeah, I saw that volume growth accelerated in Q3. How much are we talking?
Total volume grew by 8% in Q3 and premium volumes shot up by a whopping 33%. That premium segment is really driving growth for them.
Wow, 33% in premium volumes? What brands are leading the charge there?
The usual suspects, Kingfisher Ultra Max, and Heineken Silver are doing really well. Plus, they recently launched Amstel Grande, and it seems to be gaining traction.
Amstel Grande, interesting. So premiumization is definitely paying off for them.
Absolutely. And it's not just volume. Their price mix is also contributing to the net sales increase. They've implemented price increases in multiple states, which, combined with that premiumization trend, is boosting their top line.
Okay, so volume and price mix are the key ingredients here. What about costs? Are they managing to keep those in check?
Well, cost of goods sold COGS has increased, but their gross profit margin is still up, so they're managing to offset that somewhat. They've also got a productivity program in place that they say will deliver around 50 crore rupees in annual gross savings in the future.
A productivity program, huh? That sounds promising. Any idea what that involves?
The report says it's designed to improve their efficiency, productivity, and competitiveness. So it probably involves streamlining operations, optimizing resource allocation, and maybe even some automation. That exceptional cost of 26 crore rupees in Q3 was related to implementing this program.
Makes sense. Short-term pain for long-term gain, hopefully. So let's talk a bit more about their expenses. What's driving the increase in employee and other expenses?
The report mentions that the increase is driven by inflation and investments behind their brands and organization. So they're spending more on marketing, advertising, and building their team to support future growth.
Okay, so they're investing in the future, which is good to see. Now, are there any potential risks or challenges on the horizon? Anything we should be aware of?
Well, there's still the ongoing legal battle with the Competition Commission of India, CCI. The CCI had levied a penalty on them a while back, and they've been fighting it in court. They've deposited a significant amount with the court, and the final outcome is still uncertain.
Ah, yes, I remember that. That's a pretty significant contingent liability, right?
It is. They've deposited 16,795 lakhs rupees already, and if they ultimately lose the case, they could be on the hook for a much larger penalty. However, based on legal advice, United Breweries believes they have a strong case.
Okay, so it's a waiting game on that front. Anything else?
There's also the situation with their manufacturing facility in Bihar. They had to shut down operations there due to a ban on alcohol, and they're now in a dispute with the Bihar Industrial Area Development Authority, BIADA, over the land lease.
Right, I recall something about that. What's the latest there?
They're currently in a legal tussle with BIADA over the land. The carrying value of their property, plant, and equipment there is 6,417 lakhs rupees. They're trying to resolve the matter, but it adds another layer of uncertainty.
Okay, so a couple of legal overhangs to keep an eye on. Now let's talk about the outlook. What's United Breweries saying about the future?
They remain optimistic about the long-term growth potential of the beer category in India. They believe that increasing disposable income, favorable demographics, and premiumization will continue to drive growth.
Makes sense. India is a young country with a growing middle class, so that certainly bodes well for the beer market.
Exactly. And they're focused on building further category growth while driving the share of premium in their portfolio. They're also committed to revenue management and cost initiatives to drive margin accretion.
Okay, so they're playing the long game, focusing on both top line growth and profitability.
Precisely. Oh, and hey, if you're enjoying this kind of in-depth financial analysis, don't forget to like, share, and subscribe to our YouTube channel for more content like this.
Disclaimer: we advise investors to check with certified experts before taking any investment decisions. Right? So, final thoughts? Sum it all up for me.
Okay, so overall, United Breweries had a mixed quarter, but a solid year-to-date performance. Volume growth is accelerating, especially in the premium segment, and their price mix is also contributing to revenue growth. The market seems to be rewarding their strategic investments and long-term growth prospects, as evidenced by that stock rally.
But there are those legal challenges, right? The CCI penalty and the Bihar land dispute.
Exactly. Those are potential risks to keep an eye on. However, their long-term outlook remains positive, driven by favorable demographics and premiumization trends in the Indian beer market.
Okay, so it sounds like a company with strong fundamentals, but facing some near-term headwinds. It is like learning to adapt a recipe when you're missing some key ingredients, right?
Yeah, that's a great analogy. They're navigating some challenges while still trying to deliver growth and profitability. Now, keep in mind that all these numbers are for the quarter and year-to-date ended December 31st, 2024.
Got it. Well, thanks for breaking down the report for me. It's always helpful to have someone walk you through the key numbers and nuances.
No problem. Always happy to dive into the financials and see what's brewing, so to speak,